Greetings and welcome to our presentation. Before we dive into it, let me start first by introducing myself and my fellow group mates that will be taking you through the first half of the presentation. I am Yao Nepema and I'm here today with Jeffrey Kyongera and Nonhlanhla Mpofu. Together we'll be taking you through two of the most notorious scandals that have shaken the foundations of trust and integrity within the financial industry. From the cunning manipulations behind the scenes to the colossal impacts on the economies and individuals alike. With that being said, this is what we know about the Wirecard scandal. Wirecard was a global online payments processor founded in 1999 in Germany before going global and expanding in the 2000s. The company was involved in a massive accounting fraud, falsifying its balance sheet, increasing its cash to make it seem very high, leading to its insolvency in June 2020, post-revelation of its fraudulent activities in an investigation. I'll be taking you through two of the standards that they failed to uphold in the process. First, I'll go through integrity. By inflating their finances to billions to appear more appealing and healthy to the stakeholders, Wirecard was against the fundamentals of integrity, which was deceitful and unfair. Moving on to objectivity. This principle requires the financial reports to be free of bias, which is what the Wirecard employees didn't uphold when inflating finances to appear to be doing better than they were actually, which misled stakeholders of the company. I'll be handing over to the next part.
My name is Jeffrey Kyongera. I'll be taking you through the internal and external enablers. First, we're going through the internal, pressure for growth and insider trading. What is pressure for growth? Pressure for growth was influenced by ambitious growth targets that resulted in employees getting pressure to manipulate final accounts of financial statement figures or overlook red flags since compensation is tied to performance. Then insider trading, allowing stakeholder agencies that are supposed to control and monitor the company to trade company stock, creates conflict of interest as the number one priority is profitability and liquidity. Market overconfidence. Fintech was a robust sector. Investors and analysts were less critical of Wirecard as a result. As a result of this, as the market itself was very robust, it was growing at rapid rates. So investors and analysts felt as though the growth of Wirecard was nothing out of the ordinary. Auditor complacency. Wirecard auditors failed to detect and report on the company's dubious accounting practices. This allowed for Wirecard to continue with this fraudulent behavior as nobody paid attention to the red flags. Regulatory failure. BaFin, the German financial regulator, were too lenient on Wirecard and disregarded whistleblower warnings, allowing for them to continue being fraudulent. This regulatory failure also was due to poor or ineffective regulatory practices. Wirecard managed to escape with a lot of the fraudulent behavior. Social impact, financial trauma on individuals. Thousands of employees, merchants who were relying on this payment process lost large amounts of money, as well as investors faced severe financial losses resulting in failure to maintain their lifestyle or reducing the quality of life of many of the individuals who were involved in this scandal. Breach of market integrity. The reputation of Wirecard as a European tech powerhouse was tarnished. Customer confidence was lost. Customers became reluctant to rely on financial institutions. This resulted in having to use traditional methods for payment, meaning there was no variety in means of payment. Also, transaction costs were very high as a result. It was an issue of convenience, reducing the quality of many of the people involved in this scandal, as they had to incur more costs. and were failing to maintain their lifestyle. My colleague will take you through economic impact.
I will be talking about the economic impact of Wirecard. Financial loss for investors. The collapse of Wirecard stock price resulted in substantial financial losses. This included hedge funds and individual shareholders. Then we have employment and economic growth. The downfall resulted in a loss of jobs and disrupted economic activities. It also affected employees directly as they no longer had jobs to sustain their lives. Businesses also relied on its services. Businesses that relied on its services faced challenges also. I'll be talking about the recommendations. The first recommendation is the risk management systems. By using the risk management systems, we can identify all possible events in which a risk is presented. And then we perform an assessment risk to create reliable information for stakeholders. And then we prioritize the risk and to monitor it as time goes to check the severity of how it is and implement and monitor the progress of the risk. And then the second recommendation is strong audit practices. They can use this recommendation by planning out time for audit planning, by setting clear objectives and expectations in their meetings, to establish standards to ensure accuracy, reliability, and consistency, and to also invest in the right software and technology. The third recommendation is to enhance corporate governance and transparency. By doing so, they can ensure accurate and timely information for investors and stakeholders. Thank you.
Good day, everybody. I'm Maduo Orumeng, and I'll be taking you through the second and last part of our presentation. I'm here with Kahopel Mahaladi and Thapelo Mogali. The next presentation is about the rand manipulation scandal. Imagine waking up tomorrow and realizing that your monthly bond payment has increased by 20%. Well, for most South Africans, this is the impact of the currency manipulation. Now let's look on how this currency manipulation occurred. How did these banks manipulate the currency, and what is the impact of this scandal on the economy, the lives of ordinary citizens, and daily business operations? From 2007 up until 2013, 20 banks from different jurisdictions such as Asia, Europe, and USA and South Africa, both international and local banks, colluded together to manipulate the South African rands against the US dollar through an illegal practice called price fixing. What exactly is price fixing, and how did these banks manipulate the currency? Well, price fixing is an illegal agreement between competitors in a market to set up prices at a certain level, usually higher than the normal prices. In this case, the banks eliminated competition by driving up prices for consumers and increasing the interest rate and setting up only one interest rate, regardless of the market forces. The banks communicated through online platforms to coordinate the buying and the selling of the rands so that they can make bigger profits. They even shared confidential information about customers and also eliminated other banks from participation. According to the Competition Commission of South Africa, these banks generated trillions of money every day. It is also important to know that Standard Chartered Bank is the only bank that admitted liability in the currency manipulation and was fined only 42 million rands, regardless of the trillions and millions of money that they made. This so forex cartel and investigation has been going since 2007 and at least 2013, and it is still under investigation. Moving on to the principles breached in this scandal, we have confidentiality and integrity. Sharing competitive sensitive information, including information on customer inquiries and orders for the purpose of manipulation, compromises the confidentiality of customers, the confidentiality of the currency exchange market. This scandal also compromised the integrity principle. The International Federation of Accountants Code emphasizes on acting with integrity and upholding public trust. In this case, manipulating the rand for personal gain has been seen as breach of this principle. It undermines trust in the financial and fairness of the markets. Now, these are the principles breached. I'll move on to the internal and external enablers, and then Kago Mohaladi will take over the external enablers. When we're talking about the internal enablers, we are looking at the weak internal systems, loopholes within institutions that are supposed to provide an oversight, create an opportunity for fraudulent activities. This scandal has been going for many years without detection. This really shows that there is a problem within these systems that are supposed to navigate such activities. We also have incentive structures. Performance bonuses tied to profits promote risky behaviors and pushes employees to manipulate and push profits. Employees manipulate the currency, manipulate the market in order for them to make the target profits that has been set by management. This is all I have. Kago Mohaladi will take over through the external enablers.
I'll be taking you through the external enablers. The first point, complexity of foreign exchange market. The foreign exchange market is vast and decentralized. This means that it is huge and it is not managed by one single authority or government, making it challenging for regulators to effectively monitor the activities that take place. Global culture of manipulation. The culture emerged alongside the LIBOR scandal, where the bank was falsely inflating and deflating the rates to profit from the trades. This suggests a broader cultural issue in the financial industry, where prioritizing short-term gains and aggressive trading tactics have become a normal thing. The social impact, reduced quality of life. Most South Africans have suffered the deterioration of the quality of their lives, as some have lost their homes, which deprive their right to shelter. Some also lost cars, which deprived their comfort of life. This was due to the high interest rates in the country, so some had to cut their expenses to meet their daily needs. Public debt burden. The attempt to curb inflation. This inflation was caused by the rand weakening against the dollars. So this means that the cost of importing goods was now higher. So to tackle this problem, they applied the contractionary monetary policy, where they raised interest rates. And this negatively impacted the local citizens. Example, if a bond valued at 100,000 and an individual pays around 5,000 and the interest rate increases about 0.5%, the individual will now pay an extra 500 each month, which should derail them from their normal budgets. My colleague Tapel will be taking over.
So, I'm going to discuss the economic impact of the rand manipulation in the economy of South Africa. The first impact is the low investors' confidence. Well, in this scenario, we can see that most of the investors locally and internationally held their investments in order because they knew that the economy of South Africa was unstable. They didn't know how the value of the rand towards the dollars were, so they held back their investments. And then the next impact, the economic impact, we have high consumer prices. High consumer prices in what sense? Ladies and gentlemen, people in the production sector, they had a cost push inflation where most of their costs increased. When the cost increased, that means they have to increase the prices for consumers. Therefore, consumers used to buy products and services at a much higher price. And then when we get to the last segment of our presentation, what we have for you in store, the recommendations. The first recommendation is the Independent Banking Commission. Well, in this recommendation, we would like to recommend to you guys that you need to have a panel of prominent people from different sectors, from the private sector, from government sectors, in order for them to panel beat any irregularities in the economy, so that they can be able to opt out any loophole in the economy. And then for the second recommendation, we have amendment of the Exchange Control Act and the Currency Exchange Rate Act, the Currency and Exchange Manual. In this, we are just saying that we need to be able to have a floor and a ceiling of the exchange rate. We have to have the maximum and the minimum, so that people or banks, the people in the financial sector, they will be able to know where to stop their exchange rate and where to begin their exchange rate, so that there's not that much difference. And then the last recommendation, we have stronger penalties. Well, banks involved in any criminal or any financial criminal activities should be charged or fined a lot of money. For instance, in this case, we suggested 10 to 35% in 10 to 35% in their yearly turnover. One of the other thing, we can revoke their licenses if there's any financial crime that they do. Ladies and gentlemen, this is our presentation and we are done. Thank you.